Phillip Morris International and Altria confirmed that they're in talks to merge more than a decade after the two companies split up into separate domestic and foreign businesses. A merger of equals, as it's being called, would once again create a worldwide tobacco giant as smoking rates decline around the world. The new company would be valued north of $200 billion. Joining us now is Garrett Nelson, senior equity analyst at CFRA Research. Garrett, thanks so much for joining us on this. You issued a new note on Altria after this news broke. So do you like what you're hearing? Do you think it is a merger of equals?
So we think this deal is very unlikely to happen for a few reasons, but mainly because first, the companies have to agree on mutually acceptable valuations. And there was some confusion about that because they put out this very short press release yesterday saying that they're considering a merger of equals. Well, Phillip Morris is a significantly larger company than Altria. So what you saw was Phillip Morris shares sold off by about 8%, because it would imply a much higher valuation for Altria. But then there were some reports that maybe the ownership split would be more like 59% Phillip Morris and 41% Altria. So first they have to agree on a valuation, but the biggest hurdle, even if they do agree on a valuation, is getting the approval of Phillip Morris shareholders. And we think there might be a lot of reluctance on their part to re-enter the U.S. market. Remember, Altria is a U.S. pure play. Given the increasing regulatory scrutiny, specifically surrounding e-cigarettes in the U.S., and also the fact that Altria's net debt has more than doubled over the last year. So we think, there's going to be a lot of questions if you're a Phillip Morris shareholder. And this merger would require approval from shareholders of both companies.
Now, you did raise your opinion. So what is the bullishness that you have? Where's it coming from?
So this morning we raised our opinion on Phillip Morris, and it's because we think this deal is unlikely to happen, and therefore the stock is likely to regain a lot of the value that was lost yesterday after the announcement. But also, the stock has one of the highest dividend yields in the S&P 500 currently, well over 6% yield. We think that's attractive, and the stock being a more defensive name at this time, a time which yields for a lot of different securities, such as government treasuries, are plummeting. So we find it attractive both on an absolute and relative basis. Also, Phillip Morris stock is down about 18% over the last 5 months. So we think it's a good entry point here. We raise it to buy with a 12-month price target of $85.
Garrett, obviously these two companies combining would provide massive scale in terms of not only the combustible tobacco business, but also with regard to vaping, given that Altria does own a 35% stake of Juul, and Phillip Morris International has the IQOS device, excuse me, I don't know how to say that as well. What else would it do, though? I mean, what would scale do for the industry?
So we think the value here, as far as what Phillip Morris is seeing, is Juul. Altria's 35% equity stake that they've purchased earlier this year, and being able to leverage that to Phillip Morris global markets. They're in many, many different countries around the world. So we think that's the long-term value. But from Altria's perspective, we think the company was in a very difficult spot because they had taken on so much debt from the acquisition of the Juul stake as well as Kronos. Their debt had increased by about $15 billion in the process, and they're committed to maintaining a dividend payout ratio of 80%. We think they might have had some difficulty maintaining that dividend over time, given the amount of leverage on their balance sheet now, and given how much tobacco sales are falling in the U.S.
Right, and that, again, one of the reasons why back in 2008 they split off. Altria was the parent company at that time, Phillip Morris International, having this huge stake over in the rest of the world, in particular in Asia now. And you mentioned this as part of the reasoning of why it doesn't make sense now in your mind for this to combine. A lot of people do feel like, though, if this were to happen, it would give Juul international exposure and expansion as well. So do you think that's going to be a big argument that the bankers will play up when they try to get these deals signed?
We do think, I mean, that's the primary justification for wanting to do this, in our opinion, both Juul as well as Kronos, so the cannabis opportunity. But we think, they would have a lot of work to do to really convince shareholders who already took an 8% hit in share value yesterday, that this is a good idea to re-enter the U.S. market, considering all the regulatory headwinds and also growing bipartisan support to really crack down on e-cigarettes. One other thing I would mention that at the state level, more than 50% of the U.S. population now lives in states where the tobacco purchase age is now 21. So that's very quietly been happening over the last year or two.
So what is, and you can see this reflected in data here in the U.S., the cigarette smoking among U.S. adults since 1965 has actually absolutely just dropped. Really raises the question, Garrett, what's the future of a tobacco company in 5 years from now? What does it look like in the U.S.? What does it look like internationally?
Well, clearly the future is in smokeless. It's in vaping, but given all the attention now on the risks, really a product that hasn't been studied as far as long-term health effects, we think you're going to see the FDA coming down a lot harder on e-cigarettes, and also there's this growing support on Capitol Hill. So that's the future. I mean, that's the end market that's growing is e-cigarettes, and kind of weaning people off of cigarettes and transitioning them into e-cigarette users. So.
Right.
We think that's the opportunity, really globally in the coming years.
And it'd be interesting to go back into that data and maybe recalibrate it to include, vaping, because I'm sure there's now overlap, and I don't think that chart necessarily reflects even the growth even a little bit in that particular market.
Yeah, and I think the FDA too certainly learned its lesson with tobacco and the way that it is treating smokeless right now. Garrett Nelson, Senior Equity Analyst at CFRA Research. We got to get you back on this. Thank you so much for joining us. We really appreciate your time today.
Thank you.
Thank you.